Portugal's economy contracted by 1.2% in the second quarter and 3.3% year on year. But does new data surrounding the country's yields suggest good things for Portugal's debt? I'm joined down the line by President of IMF, Filipe Garcia, to get his opinion on the subject. Mr. Garcia, thank you for joining me. Portuguese government bond yields sank today to levels last seen before the country was bailed out in May 2011. What does this mean for the country's debt, and does it show Portugal is making progress on the reform front?
Of course, Portugal reforms are in place at this point, and that Portugal image is good because Portugal complies with Troika programs, and the country is aligned with the program that he agreed in the past. So it's a bit different if you compare with Greece, when you see a lot of resistance in order to implement the measures. So that helps. I think that the bond yields reflect risk pricing, including two dimensions. One is the redenomination risk. It means Portugal out of the Eurozone. And of course, the haircut risk, something that happened already in Greece. And I see that now both these risks are lower, and the market sees it lower, because it's not so likely that Portugal goes out of the Euro, and it's not likely at this point that we'll restructure the debt. But in a final note, I would say that Portugal's path in terms of bond yields is quite linked with Spain and with everything that happens in Spain. And I think the market at this very moment doesn't see Portugal face to be different from the one of Spain. If Spain, for instance, has to do something to their debts, of course Portugal will follow. If Spain for any reason leaves the euro, Portugal of course will follow. But at this point it's not likely that either of one happens.
I see. So what could be done by the government to help the struggling economy?
We think that now we have a liquidity problem at the corporate level here in Portugal. So it's not the austerity measures that are dampening the economy at this moment, but the speed of the deleveraging process. And that means that companies are without cash. And the thing that is really needed in the Portuguese economy now is to inject money in some way. Because if not, we are going to lose a lot of companies, a lot of good companies that will be lost forever. I think there is a misconception in saying that it's the austerity that is causing the economy to slow down or to become sluggish. Of course, austerity measures doesn't help an economy to grow, but the main risk here is about bankruptcies, and that kind of bankruptcies are happening because of low liquidity, a liquidity crisis at corporate level. So that's the issue that I think the government should focus at this point.
You are based in Portugal. What is the view that you have seen from Portuguese residents towards their government and their economy?
Well, people are resigned, they are calm. That's good, but they are also a bit tired of all this situation. I think people understand that the country is in debt and that some kind of adjustments are needed, both in the short term and the longer term. But at the same time, I think people are becoming a bit tired because there is a point on making sacrifices, on taking our measures, but only if we see a light at the end of the tunnel, only if we see an upside, any good perspective. And we are not seeing any of that now. So people are wondering if this kind of sacrifices make sense or not. I think that's the point that is being asked now for people. But we are still calm, we are compliant, and I don't expect anything important to occur in terms of reaction to the measures, something very different from Greece, for instance.
I see. And do you feel Portugal will be able to sustainably fund itself in the market?
There are plans to go to market in September next year. But I would say that basically it doesn't depend on Portugal itself. It depends on the way the euro crisis evolves. So if things get more complicated in the future, I think it would become clear that Portugal will not be able to finance itself. But on the other hand, if the solution comes, Portugal will have some more possibility of doing. What I mean here, of course, it also depends on the terms and maturities that you are speaking. It's very different to issue 1 year or 10 years. But it not depends on what Portugal can do, it depends on the way the euro crisis evolves.
Lastly, do you feel the country could be on its way to needing another bailout package?
It really depends on what you call a bailout, because Portugal will definitely need more time as the economy is sluggish. There is a pronounced slowdown. We are not growing at all. That means we might need more time and more money, but probably not a classical bailout the same way we saw in the last year. Also here, it will depend a lot on what happens now, because the remedies or the solution that are going to be implemented in the Eurozone, well, beginning now in September, will have a dramatic influence on the way Portugal could finance itself for the next year or not. What I see is that Portugal is going with the flow in this crisis. We are doing our job, let's say. We are complying with the programs, but if economy doesn't grow, we cannot go a lot beyond that. So we are definitely very dependent on what happened at the Euro level.
Thank you, Mr. Garcia, for your insights today. That's all from me, but click back to the website for more interviews and updates. Goodbye.